Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX walkthrough for November 18th, 2008. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report, and we can read the synopsis on top. Read the headline. Dollar bull trend remains intact. The euro dollar remains in a bear trend and could fall to a new low below 123 this week. So if we scroll down and read a little more specifically about the euro dollar trend is down as long as price is below channel resistance and 1.2861 specifically. Still, until a break of the large range, 130 to 123, that is held since late October, confidence in directionality is low. For now, I'm sticking with the triangle count, which is the fourth wave being complete. And I'll go into that a little bit more in depth once I do bring up the charts. Next chart is the dollar yen, as that's what we have been focusing on in my reports for the most part. I'll read the synopsis. The larger dollar yen trend is down, so strength should be sold. It's unclear whether or not the rally from 90.86 is complete. As long as price remains below 98.31, bearish potential is significant. However, support from the 61.8 of 90.86 to 100.60 is a warning that 100.60 could be broken. And I'll go into that as well once I do bring up the charts, and that's exactly what I'm going to do right now. The first chart is the euro dollar, and this is the fourth wave triangle that Jamie was speaking about. We did have a breakout beneath that triangle, and we could see that the upper resistance line of the triangle did act as resistance two specific times over the past few days. If we zoom in a little, the one thing, as Jamie mentioned, confidence is low. The one thing, just looking at this chart today, I was just trying to clear my mind and look at it, completely objectively. And that's the one thing as traders we should always, look for or strive for, and that's objectivity. And the one thing I was looking at is that this, the initial rally from or the 123 low up to near the 133 figure looks very impulsive, and the price action since then could be, considered corrective. So that's a reason why I think, I can't read Jamie's mind, but why his confidence might be a little low in this count. But the overall trend is down, and we should maintain that bearish bias against the upper resistance line of the triangle that the pair broke out from. So that's what I would look for moving forward. The next chart is the dollar yen, and this is the resistance line that I've been using for the past few weeks, and actually it appears as though the high is off the chart now where this resistance line started. And as Jamie was mentioning, there could be a chance for a break above it. I'm sort of feeling the same way. I remember that when we had the previous resistance line, we were getting in that same sort of area where prices were coiling, if you will, just beneath the resistance line. And the more times the resistance line is tested, the more likely it is to fail. So moving forward, I'd maintain that slight bearish bias against this resistance line, but keeping in mind that the chances that the resistance line will break are increasing with every test of the resistance line. So that's something to look for moving forward. The next chart is the Kiwi dollar. And as I was mentioning here, the 78.6 fib did hold, but then we had a rally off there, then a break below, and now another break below that 78.6 fib. This is something, again, as I was mentioning in yesterday's report, confidence is very low. The same logic can be applied to this chart as I just applied to the euro dollar chart, in that you can look at this chart objectively and say that the price action since the initial rally off the low, off that 53.51 low, is corrective. So, and the one thing that makes me lean towards the bullish side in the Kiwi dollar specifically is that SSI reading, which has been consistently negative, and that is a very bullish signal, and SSI is one of the most reliable indicators that we can use in FX. So with prices meandering and getting close to that 53.51 low, that's what I would look for. I'd look for a double bottom, or prices getting close enough to that low to set up a good risk to reward trade. So that's something we can look for over the next few hours, or maybe the next day or two, is maybe an approach to that 54 figure where we might enter, placing our stop beneath the 1027 low. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.